basically the insurance industry overall is obviously starting to change. So you have what I call data science coming together with the classical actuarial business. And what we've seen is pay as you drive is now more or less standard in the car industry. So obviously if you build a car accident, your premium goes up. And if you drive at night or you accelerate within town. So we think it's going to be very similar in life and health insurance. Of course, there will always be the solidarity principles. I'm a big believer in that, as you know. But basically that there will be part of the premium that would be based on your lifestyle. So I think there's two and positive changes to it. Number one, that in today's world, it's, for instance, very difficult to get insurance if you have diabetes 2. There's no reason why we shouldn't insure diabetes 2 people, but we need to understand what the risk is. The only way we can understand that risk is obviously by scoring that risk. So that's point number one. Point number two is that life and health insurance companies, they should have a key interest in keeping me healthy, because if I stay healthy, I live longer. And I know it sounds stupid, but at the end of the day, I pay more premium, right? So if I die, they have to pay out. If I survive, I can pay more premium. So that's from the life insurance side. From the health insurance side, also in Asia, we see an explosion in chronic diseases. And you saw the study that I showed today from the WHO, where 68% of all expenses before the year even started goes to chronic diseases. So I think that's it's twofold, and we call this the something for something economy. So basically that the consumer, and I never talk about the patient because they should be healthy, but of course they cannot be ill, they should have an interest in getting the best possible service. But I can only get the best possible service if, I also provide some data. And as we heard from Antonio earlier today, the most important, for large insurance operators is, of course, the trust. And that's why I call it the something for something, because the consumer shares some data, of course, anonymized and no, really confidential data. But in exchange, that person gets a better premium. So it's still early days. I don't think it's early days for digital. As you heard today, I think it would disrupt faster. And if you look at today, companies such as Oscar or Clover or Alan in France, they have valuations of $50,000 to $100,000 per patient or per client that they cover under health insurance, where a classical health insurer is maybe trading at 6, 8, or 10 times EBITDA. So you can imagine the value difference that the public markets are seeing in somebody who is completely digital as a health insurance operator. And we will see the same in life insurance. You just had VFox also on your website who raised record amounts. Again, I'm not investor in any of these companies. I'm just saying that the market is judging with its wallet, right?
Right. So what would be the next step for insurers if they want to embark on this pay-as-you-live scheme?
Yeah, very good question. So I think at the end of the day, it's about a platform-based economy. So that platform-based economy is obviously driven by that you create a platform where I always say there's three key issues. Is number one, connect with the client. And, as we heard from another speaker, that's about relevance. So you would only connect with me as a consumer, as a buyer of an insurance product, if I'm relevant to you, right? So that's number one. The second thing is, as I said before, scoring. I don't care if it's dacadoo's health score or another score. We all know a credit score. We all know our age. We all know I live in number 5 or on the 5th floor. So human beings are very used to comparing and understand. So first, you connect with me in one way or another. You give me a proxy of my life, and then you start engaging. And this engaging, I call it programs, because your life is not my life. You're younger than me, I'm a bit older. So basically, you cannot just one size fits all. It won't work. And I love when Amazon says we have 1.3 million products on the shelf, whatever the number is. And most insurance companies, they have 5, 6 standard products that they sell. And that will change. and you need a platform. You cannot run that on an IBM mainframe, and I have nothing against IBM. I'm just saying you need cloud-based computing, you need real-time, you need Internet of Things, integrated electronic medical records. And if you think about 5G, where Asia, by the way, is in the lead, we're going to see over 10 billion IoT devices over the next 5 to 8 years connected to that 5G network, which, by the way, is going to be 100 times faster. So you're going to have your blood values, you're going to have your nutrition behavior. And if you think you're going to enter it by your finger, no way. This is going to be voice-based, it's going to be picture-based, and, as I said before, fun, easy, and relevant. So it's a whole new generation of digital life and health.